ULIPs, that is Unit Linked Insurance Plans, remain one of the preferred investment options for an individual. However, some amendments are introduced in the Income Tax Act to tax the returns from certain ULIPs. Watch this video till the end to understand the taxation concept of ULIPs with examples. Hello and welcome. I'm Maishi from Clear. We have assisted more than 80,000 tax experts and 6 million tax filers. Do subscribe to support us and get a clear explanation of finance concepts. Before 1st February 2021, whatever returns you received on the maturity of an ULIP plan were tax-free under Section 10(10)(d) of the Income Tax Act. Also, you could claim a tax deduction under Section 80C. The Finance Act 2021 introduced certain amendments to the income tax provision, and with effect from 1st February 2021, certain ULIP plans were no longer exempted from tax. Now let's discuss how the proceeds from the ULIP plan will be taxable. For the policies issued on or after 1st February 2021, in case you have paid an aggregate insurance premium of Rs 2.5 lakh or more for any of the financial years, then the amount received including the bonus at the time of maturity will be taxable. Or in case an individual has purchased multiple ULIP plans and the aggregate amount paid is more than 2.5 lakh during the tenure of the policy, then it will come under the ambit of taxation. So, how to pay tax on ULIPs? Well, it will be taxed under the head capital gains. Long-term capital gains, that is LTCG tax, will be applicable on ULIPs like the tax on all equity-oriented investments. Tax shall be paid at the rate of 10% for gains above Rs 1 lakh without indexation if the holding period is long-term, that is more than 12 months. If the holding period is less than 12 months, short-term capital gain tax is levied at 15% on overall gains. However, there is no tax in the case of a death of an individual. Now let's understand the taxation of ULIPs using a few examples. Mr. A and Mr. B purchased ULIP plans of Rs 8.5 lakh and Rs 26 lakh respectively with a maturity period of 10 years. The annual premium paid by Mr. A is Rs 85,000 while for Mr. B it is Rs 2.6 lakh. After 10 years, the maturity proceeds that Mr. A receives is Rs 20 lakh while Mr. B gets Rs 48 lakh. Now the Act says that the returns from ULIP issued on or after the first day of February 2021 is not exempt under Section 10 if the amount of premium payable for any of the financial years during the term of such policy exceeds 2,50,000 rupees. Since Mr. B was making an annual contribution of an amount exceeding Rs 2.5 lakh, he is liable to pay tax on Rs 22 lakh. That is, the total amount received less premium paid shall only be chargeable to tax. While Mr. A will receive an exemption under Section 10(10)(d) as the annual premium was Rs 85,000. Did you understand the new taxation rules of ULIP? If yes, please comment clear in the comment section below. Let's take a look at another example. Suppose Mr. Ahuja purchased ULIP 1 of value Rs 10 lakh, ULIP 2 of value Rs 15 lakh, and ULIP 3 of value Rs 30 lakh respectively with a maturity period of 10 years. The annual premium paid for ULIP 1 is Rs 1 lakh, for ULIP 2 is Rs 1.5 lakh, while for ULIP 3 it is Rs 3 lakh. After 10 years, the maturity proceeds of ULIP 1 is Rs 12 lakh, for ULIP 2 is Rs 18 lakh, while for ULIP 3 it is 34 lakh. Now the Act says that in case of more than one ULIPs purchased after 1st February 2021, exemption under Section 10 will be available only with respect to those ULIPs where the aggregate amount of premium does not exceed Rs 2.5 lakh in any of the financial years during the term of any of those policies. Now the aggregate of the annual premium payable of ULIP 1, ULIP 2 and ULIP 3 exceeds Rs 2.5 lakh during the term of these policies. Hence, the consideration received under ULIP 3 will not be exempt under Section 10. However, the consideration received under ULIPs 1 and 2 shall be exempt under Section 10 since the aggregate annual premium payable for these two policies does not exceed Rs 2.5 lakh for any previous year during the term of these two policies. This is how you need to calculate tax on ULIPs on receiving its maturity proceeds. Also, the due date for tax filing is fast approaching. Filing ITR on ClearTax is simple and easy. Use ClearTax platform to self-file ITR. We also have plans where you can avail expert assistance for return filing that also provides post-return filing support. Furthermore, we are also available to assist you live online for 100% accurate and transparent filing. I hope this video was helpful for you. For queries related to business or taxation, you can contact our experts by clicking on the chat link provided in the description box below. Also, don't forget to subscribe to our channel for more such informative videos and stay tuned for more updates.